Now, like I said, one of our other moderators had an absolutely monster end to the week. So in order to come on and have that conversation with me and recap the week, recap some of the trades, I want you all to give a big shout out and a big TTG welcome to Shy. Shy, where did you go?
Oh, I'm sorry. I was listening to Rich Homie Quan. I be feeling like the man when I walk through. Watch me.
Oh, yes. I love it.
Watch me walk through.
Yeah, Rich Homie Quan. I love it. Oh, that's fantastic.
Oh, I'm sorry.
Enjoy it. Hey, Shy, listen, I don't blame you, man. Huge way to finish and close out the week. Just tell us, I mean, we were on the live stream. Last night, I was going over with people the Palo Alto trade, right? Because we had Fortinet came out with earnings, and I knew that you and a bunch of other members were in put options on Palo Alto. So anyone that was on the live stream last night, you guys knew coming into the day today that members of True Trading Group and one of our moderators, Shy, right here, were in put options on Palo Alto. It turned out to be an absolute monster of a trade. I can't even stress. You're talking about a 215% gain on Palo Alto. So walk us through the trade, Shy. I think you had 215% this week on Palo Alto, 158% on Snowflake, and 229% on Enphase. Is that correct? Oh, man. That is just that is lights out trading, guys. But, you know, I'm not surprised, though. We said this is going to be a volatile week. Once that happened, once the rate cut happened with Fitch, I said, that's it. Everything's changed. Volatility is going to be through the roof. The VIX is spiked. And now here you go. The markets are starting to pull back in. Stocks are making huge moves. You're getting 10, 15, 20% down moves on some of these names, all while earnings are coming out. You can't ask for a better trading environment. Talk me through some of these trades.
I mean, we can start with Palo Alto because that was from yesterday to today. Like when I do my one-on-ones and when I talk to members, I always tell them to trade what you know, right? Like I joined TTG. I learned how to read charts. I learned how to do everything. But what I am in my heart is tech. You know, I was a director of IT. My degrees are all in IT. So I tend to trade a lot of tech stocks. And when we talk about Palo Alto, if you were to ask any company, you know, what kind of servers or firewalls are you using? Everyone's using Cisco. Cisco is the industry leader. But Palo Alto is also in the mix, and that's because they're still like on premises. So your servers, your switches, whatever, you can have Cisco, you have Palo Alto. Cisco is like your granddaddy one, but it's safe, secure. You're not going to have problems. Palo Alto, you need new engineers and everyone. It's a different type of programming. So when you think about Fortinet, which is also on-prem, so like a lot of members were confused today as to why Snowflake rallied, but Palo Alto tanked. Why is that? Snowflake is a cloud-based kind of platform. So everything is more cloud-based. Palo Alto, Fortinet, these are more like brick and mortars in your offices. So my whole thing, I thought this move was going to happen yesterday, because if you really start to sit back and think about it, if you have this AI craze going just mad, right? And then you have all these different servers, you have Azure, you have all this stuff, things like Palo Alto, they become a little archaic. While still secure and businesses will still use them, I do expect them to decline in the next few years as you get more cloud-based things. You know, Snowflake is probably, you know, I know that's one of your top stops in your portfolio, and for a good reason. Why? Because it is going to be the future. So my thing was, I thought that Fortinet wouldn't. It doesn't matter if you beat or if you miss. I just feel like they're not involved in this AI space right now. Right? Fortinet is not, and that's because they're more brick and mortar. And then, so what you look at something like Palo Alto. And I told members that I was taking the 235 puts for next week. Even on that little rally up yesterday, I just held it. I put on a little bit of a hedge trade. And when you put on a hedge trade, it's smaller than this was my big position. A hedge trade is very, very small. And this just to minimize the loss if I am wrong. But I went to sleep. I slept like a baby, Mike. It was like Christmas. It was like
literally. You knew you're going to wake up. And as soon as the bell rings,
yes,
it's just ringing the cash register.
Yes.
You know, it's like when you win. It's like win the lottery. You're like, you know, you've got the winning numbers. All you got to do is just go hand it in. It's like
all you got to do is wake up.
So that's it. Just wake up. That's it. Wake up, and you got a 200+% gain. So I got to tell you, Shay, what I'm impressed with the thought process really behind this trade. The coming from an IT background. And for those of you guys that don't know, Shai joined True Trading about 3 years ago and has gone on to now become a full-time trader and left a six-figure position within IT and then turned down another six-figure position within IT to be a full-time trader. And she did that within just the last 3 years. Yeah. But her background, like you said, is in IT. So this is where where her knowledge is. This is where her experience is. And she knows these companies and she knows the products and was thinking, okay, because of that hardware base, you have Fortinet. Fortinet's coming out with earnings and going in and then taking a put position on Palo Alto. And the hedge was what, a call position on CrowdStrike?
On CrowdStrike. And that's because CrowdStrike do a little bit of both, right? A little hard, but not much. Like a little hardware, a little software, just a hedge, right? Because you still want to stay in the same sector as your hedge. I don't want to go like to Etsy for a hedge. Like I want to be in the same sector as my hedge. But it's a small tier one, and the purpose, you want to lose money on your hedge.
Absolutely, that's the whole point.
My contracts went from $5.45. My final take was at $17. Some members stayed in to $20, $21, but I just ran out of contracts.
So nuts. Yeah, guys. So you had, so the position here, you guys understand, the position is put options on Palo Alto. Correct. And then you have a hedge on in case the earnings were good on Fortinet, a call option on CrowdStrike, but it's a smaller position. It's just a hedge. So if the trade doesn't work, still going to be red, but not as bad red because you'll make money on the CrowdStrike call and you're going to lose money on the Palo Alto puts. You'll still finish red, but it'll be smaller red than if things just didn't work out and you were in the one.
Yeah, I mean, I was going to be red, but I wasn't going to get crushed, right?
Right, because that's exactly what a hedge is supposed to do, right? So when Fortinet's earnings come out, you get this massive gap down on Palo Alto. And then you just release the hedge, right? The hedge will be a red trade, which it's supposed to be. And then your big position is just money in the bank. And then your markets open up and Shai starts taking profit right off the bell, guys. And then this thing just fell apart. I mean, just gap down and just fell apart. Stock's down 8% today. And over I think the final take was 215%.
Yep.
215%.
I took profit at 931 at 12 for 12.50 on those contracts. And I took profit at 9.34 for $14. And then my final take profit was at 9.40 for $17.20. A few members rolled it out, but I have this saying that the gap is the gift.
Yeah, absolutely.
So anytime I get a gap down, 95% of my, like you get this move, 95% of your position just comes off.
You have to. I love that saying. The gap is the gift.
Yes.
I love that saying because it reiterates for people every single time that you get a gap that's this big in your favor, especially when you're trading options, because you guys have to understand time decay. So when you get that big of a move in a short period of time, take it, because the premium on that contract is going to be the highest at that point. So even if you just trade sideways, okay, even if you are just trading sideways, the value of that option is going to decrease. So when you get that huge gap down, take that profit, and then you hold some in case you get further downside. The gap is the gift. I love that saying.
Yeah. I preach it to members. I tell them about the IB in the morning. This is why we don't buy first thing in the morning, because the premiums are going to be so high. But it's also why you take profits first thing in the morning, because the premiums are going to be so high. So like as soon as we open up, I'm out of 95%. You hold on to like a small piece. For runners, take profit 2 more times and then you run out of contracts. It's a great trade. Bada bing, bada boom. Everybody's happy.